While most people were watching the price charts, the real decision was made in secret meetings in Basel, Switzerland. The Bank for International Settlements, or BIS, which is like the central bank for all other central banks, has now finished the last step of the Basel III endgame rules. This is not just a rumor. It is a real rule that will start when the markets open on Monday. They passed this rule quietly because they know it will change everything. This new rule makes banks change how they count gold and silver on their balance sheets. For many years, paper contracts were counted as if they were real gold. Starting Monday, that is no longer allowed. To see why this is important, you need to know about bank capital requirements. Before now, banks could hold unallocated gold and silver, which are just paper promises, and count them as safe assets. The new rule changes the net stable funding ratio, or NSFR. It makes it expensive and risky for banks to hold unallocated paper metal. It punishes them for holding short positions. This means banks must either buy real metal to back up their positions or leave the paper market completely. They made this rule to stop another crisis like the one in 2008. But by doing this, they have started a chain reaction for precious metals. This rule is the final blow to the naked short selling that has kept silver prices low for 40 years. JP Morgan and Citi can no longer hold billions in short positions without having a lot of money to back them up. It is now too expensive to try to control the price. The cost of holding these positions has just gone way up. We are already seeing banks closing their short positions in the overnight markets to follow the new rule by Monday. This buying is what will make the price go up, not guessing, but because of the new rules. The most exciting part of this rule change is that gold, and also silver, are now called Tier 1 assets. Before, gold was seen as risky, like a stock. Now, it is seen as safe as cash or government bonds. This makes banks want to buy real metal to make their balance sheets stronger. They are moving from keeping prices low to collecting the metal. When banks go from selling to buying, the lowest price goes up for good. This is why there was not much trading last week. The banks took away their sell orders because they knew this rule was coming. They did not want to be caught with short positions when the new rules started. The market stopped not because of a mistake, but because the people who set prices were changing their computer programs for the new Basel III rules. The game has changed from keeping prices low to making sure they have the metal. Big companies like Tesla and Samsung also know about this rule change. They know that if banks stop selling paper silver, the price will go up to match the real demand for silver. This is why factories are rushing to buy silver. They want to get enough before the banks buy up all the real silver to meet the new rules. It is a race between factories and banks, and there's not enough silver for both. China has been following these rules for months. The Shanghai Gold Exchange only deals with real physical gold. The West is just starting to catch up. This rule change is really saying that the Chinese way of using real metal is better than the Western way of using paper. By making this rule, Western regulators are agreeing with the East. They are saying that paper contracts are risky and real metal is the only true safety. Why should you care? Because this rule makes the banking system safer in the long run, but it makes the money weaker when banks need to buy gold and silver. Banks will have to sell dollars and government bonds. This puts pressure on the dollar to go down. As gold and silver go up in value to meet the new Tier 1 rules, the buying power of the regular money goes down. When gold is worth more, the dollar is worth less. If you have an unallocated silver account at a bank, this rule is a problem for you. The bank will want to close your account or give you cash instead because holding your unallocated silver is now a problem for them. We think banks will start sending letters to customers saying, "We are ending our precious metals program. Here's a check. If you do not have the real metal, you are about to get cashed out at the worst time." You will not hear about NSFR or Basel III on the nightly news. It is too complicated and too boring, but it is the basic system that makes the financial world work. The news will talk about wild price changes, but they will not tell you the real reason. The real reason is a big change in how banks can use paper assets. The time of unlimited borrowing ended last night. This is as important as when Nixon closed the gold window in 1971. In 1971, we stopped using metal. In 2026, with Basel III, we are moving back to using metal. It is a slow, official return to a gold standard, but it looks like a banking rule. The central bankers know the debt is too big to handle. They are getting ready with lifeboats, and those lifeboats are made of gold and silver. With banks stopping their price control because of these new costs, real prices can finally be found. We might see wild price swings in the short term as the paper shorts are closed. But the long-term direction is set. The price must go up to a level where the real supply meets the real demand without fake paper contracts. That price is much higher than $85. Because banks have to keep more money on hand, they will lend out less money. This rule change will make it harder to get a loan or mortgage. This pressure to lower prices in the economy will be met with more money printing by the Fed, causing stagflation. In stagflation, silver does the best. The smart thing to do is to do what the banks are doing. If the banks have to hold real metal, you should hold real metal. If the banks are leaving paper contracts, you should leave paper contracts. Do not go against the new rules. The trend is moving toward real things you can touch. They passed the rule. The rules have changed. Monday morning is the start of the Basel III era. The banks are rushing to follow the rules. The short sellers are closing their positions, and the real market is getting tighter. This is not a conspiracy. It is a new set of rules. The paper game is over. The real metal game has started. For years, the London Bullion Market Association, or LBMA, used a loophole that let unallocated gold be counted as a high-quality asset. This let banks lease the same bar of gold many times, making a paper pyramid scheme. Basel III closes this loophole. It says that for an asset to be Tier 1, it must be real and physically there. This makes the LBMA banks rush to get real metal. The days of fractional reserve bullion banking are ending. When London asks for a real delivery to meet these new rules, the drain on world vaults will speed up like never before. The whole $100 trillion derivatives market depends on the safety of the bank's collateral. By making banks hold better collateral like gold and silver, Basel III makes trading derivatives more expensive. We expect to see a huge event where people get rid of their borrowed positions. Hedge funds that use cheap borrowing to short silver will have to close their positions because banks will not lend to them at low rates anymore. This short covering rally will happen because of how the banking system works, not just because of what people think. Big funds in the Middle East and Asia have been getting ready for this rule change. They knew that once gold became a Tier 1 asset, its value would have to go up to support the world's balance sheets. They have been getting ready for this rule for 2 years. Now that the rule is active, we expect them to announce new investments in precious metals. When a fund with $1 trillion moves just 1% into silver, the market explodes. While Basel III focuses on gold, silver also benefits. In history, silver and gold usually move together. As gold becomes the top money for central banks again, silver becomes the top money for regular people. The gold to silver ratio will get smaller as investors see that silver is the undervalued sibling of the new Tier 1 asset. We are seeing the quiet return of precious metals as money. It is interesting that these rules were made to make banks safer, but in the short term they make them more at risk. Many banks do not have enough real metal to meet the rules. To get it, they have to buy it in the open market, which pushes the price up against their own short positions. This creates a loop where following the law can bankrupt the bank. The Fed will probably have to print money to help them buy the gold. This causes inflation. There is a fight between Basel III, which is about hard money, and CBDCs, which are digital money. While some powerful people want digital control, the banking regulators want real physical assets. This shows there is a split among the people in charge. The commercial banks want gold to survive. The central banks want CBDCs to control. In this fight, the regular investor can win by holding the asset both sides need, which is real metal. With the new rules, there will be new audits. Regulators will check the vaults to make sure the metal is really there. We think many banks have been counting leased metal as their own. When the auditors come this quarter, the double counting will be found out. A bank that cannot prove it, as the metal will be shut down or bailed out. The need for real audit-proof bars will go way up. We should also think about the miners. This rule change makes miners want to sell their metal straight to banks, skipping the regular market. If JP Morgan needs 50 million ounces to meet Basel III rules, they will buy it right from the mine. This leaves no supply for companies like Apple, Tesla, or the local coin shop. It will get harder for regular people to buy as banks keep the supply for themselves. While the rule starts Monday, it will take time to fully happen. Banks have been given some time to adjust, but the market looks ahead. The market sets prices for the future today. The smart investors are not waiting for the final deadline. They are getting ready now. By the time the full effect is felt in 2026, the price of silver will already be over $100. They passed the rule. The time of paper manipulation is ending, not because the banks wanted it, but because the regulators made them. Basel is the spark that makes the system be honest. Honest money means higher prices for gold and silver. The banks are buying. The countries are buying. The question is, are you? History repeats itself. In 1933, they took gold to revalue it. In 1971, they left gold to print more money. In 2026, with Basel III, they are bringing gold back to save the system. Every time the rules change, there's a big shift of wealth. The people who held paper assets lost everything. The people who held real metal kept their buying power. This rule change is the sign that the cycle is turning again. The system is admitting that regular money has failed and they are going back to the safety of real assets. Why now? Because inflation is not going away. The central banks know they cannot get inflation back to 2% without crashing the economy. So they are changing what counts as a safe asset. By making gold and silver Tier 1, they are creating a new anchor for the financial system that can handle high inflation. They are getting ready for a decade of high prices. If the banks are protecting themselves from inflation with metal, you should do the same thing. For 40 years, U.S. Treasury bonds were the safest place for money. Basel III changes this. By making gold as important as bonds, the regulators are saying that bonds, which lose value when rates go up, are not the only safe asset anymore. This will make a lot of money move out of bonds and into metals. Trillions of dollars will move. Even if just 1% moves from bonds to silver, the price of silver would double overnight. You have heard about the global reset. This is it. It is not just one event. It is a series of rule changes. Basel III is a big part of the reset. It puts gold back at the center of the financial world. This moves us away from a system based on the US dollar to a system based on real assets. This makes things more fair for countries like China and Russia that have a lot of metal. The West is giving up some economic power to the East through these rules. The document is signed, the rule is active, the banks are moving. The chance to get ahead of this rule change is closing fast. Once all the banks start buying real metal, regular people will not be able to afford it. Do not wait for the news to tell you what to do. The news is made by people who want to buy your silver for cheap. Look at the rules they passed. They passed them for a reason. Follow the money, not the talk. Buy what the banks are buying, not what they are selling.